What's going on, guys, and welcome back. If you're new here, we take a look at anything related to finance, but specifically investing. So if that sounds like something you want to be a part of, please consider subscribing and showing some support to the channel. Now let's get into today's topic, which is about a potential market crash. Let's go. After soaring more than 80% from its March bottom, the Nasdaq plunged more than 4% on Thursday. Tech giants such as Apple and Tesla showed some red in a span of only 3 days, as Apple fell more than 24% and Tesla dropping 28%. The question we might all be wondering is why? Well, the strong rally in tech stocks has created a massive bubble. The pandemic made everyone excited and more ambitious for tech stocks as more people had to work from home and utilize technology. Now there are people saying that most tech stocks are overvalued, and traders are selling the stocks off right now to make their profits from the rally. Historically, the S&P 500 index usually sees its bubble burst when the price is away from the mean. Let's look at the month of June. Here we can see a red rectangle which shows us a recent bubble burst or market crash. A similar crash may be upon us if tech stocks continue to sell off. Don't worry too much because a full-blown market crash, for now, doesn't seem too probable. But there's no denying that the current stock market rally has gone too far and too fast, and there's potential for a correction. Just to clear things up, when I say market, I refer to the S&P 500. For those who aren't quite sure what that means, the S&P 500 represents the largest 500 American stocks. Don't worry, it doesn't represent the entire US stock market. Now, what will I be doing? Just as a quick disclaimer before getting into this, but please do your own research before investing. I'm not a certified financial advisor, and this is only for entertainment purposes. Anyways, I will be purchasing more stocks as I'm just picking them up at a discounted price. Personally, I'm still unsure about the tech bubble, so I'm primarily investing in the health industry in hopes of a new medical breakthrough. Let's talk about 2 stocks that I will be heavily investing in during this small dip. Let's start off with WELL Health Technologies, ticker symbol WELL. It has recently experienced an explosive growth of over 20% in one day alone. This is because of some recent news that WELL Health is expanding into the US market. Some key points to summarize this news is that WELL proposed a majority stake in a US telehealth leader, Circle Medical. WELL also announced that it has received commitments for the sale of 23 million Canadian dollars of its common share as part of a private placement led by Mr. Li Ka-shing to support the deal and WELL's entrance into the US market. Let's talk a bit about the recent acquisition that WELL has acquired over in the US. Silicon Valley-based Circle Medical is a national US telehealth provider who has delivered virtual primary healthcare services in 35 states in the past 100 days and plans to extend its telehealth services to the majority of the remaining states within the next few months. Circle Medical also owns and operates 2 California-based brick-and-mortar clinics. Circle Medical's current revenue run rate is almost $5 million per year and growing very quickly, having recently experienced double-digit monthly growth rates since the start of the pandemic. WELL's cash investment and shared services support are anticipated to help the significant growth over the upcoming quarters. This great news was released on September 31st, 2020, and during the next market day, the price shot up about 22% from $4.83 to $5.90. I anticipate that it will continue to grow as it expands into the US and as well as other countries around the world. If you're unsure about what telehealth is, be sure to check out my first video where I explain it in depth. During the time of this recording, the stock price is $6.22. Thursday brought it down 7% from its all-time highs of around $6.70, so now is a perfect time to get it at a discounted price. Moving on to the second stock, it is CloudMD, which is also a telehealth company. This one is smaller, but it's aggressively growing. It recently released its Q2 report, and they revealed a 163% year-over-year growth. These are some financial highlights. Feel free to pause and take a look. The stock has aggressively grown over the past month, gaining almost 125%. At the time of this recording, CloudMD is trading at a price of $1.64. Once again, this Thursday brought it down 9% from its all-time highs of around $1.81. To be honest, this dip is relatively healthy just because of the explosive growth it has been receiving. Once again, it is at a discounted price, so you should buy in. These companies still have some risk involved as they are not yet profitable companies. They are speculative plays in my opinion. Although with their aggressive growth, it is very probable that they will become profitable in the future. That wraps up my video today. Feel free to subscribe if this video has brought any value to you. Please drop a like if you enjoyed this. Thank you in advance because it really helps me grow. Comment down below what you want to see in future videos, and I'll see you in the next one.